and more money in credit than is needed, because you don't know how much is needed, and you don't want to undershoot as the Treasury and the Federal Reserve. So that's why we have inflation and hyperinflation at times. So this is the game what we're into. Historically, if we have inflation, gold and silver and the shares are going to go up. If we have deflation, after the initial margin selling is over with, they'll hold their own. You don't have any other place to go. Period.
You know, I got a question in Wednesday. This was supposed to have been addressed. It was the Elliott Wave, gold 680, stocks 400.
Robert Proctor has been right once in 40 years. He has attacked gold since the first day I met him in 1982. And then again the last time I talked to him in 1984. And he got very put out by my commentary. He was telling me how the waves are going to do this and that. And I said, you know, we live in Malibu, and my son surfs on waves. That's the only waves we know. What he does is nothing but technical garbage. And especially in these kind of markets where today you have manipulation that you didn't have in 1982. It didn't start until 1988, and it really didn't start in the big way until 11 or 12 years ago. I mean, how can you put a slide rule to a market where you don't know when the government's going to come in and upset it?
My thought was if it really went to 680, gold and stocks 400, you're still better off.
Well,
everything's all relative.
Up until a half hour before the close, the big stocks are off 1.5%, maybe 2%. There was one that was off 3.3/8%. Because I read this to Melody earlier on, about an hour and a half ago. We got them off 3.74%, 4.82%, 4.28%, and 4.81%. And I've got 13 stocks on here, and some of them are speculative. And there is nothing in the blue. There's nothing that went up. And very interesting today, the volume in Agnico Eagle is half a normal day's volume. Half. The stock really didn't go down that much, but the point is that the volume was very low. On the other hand, Goldcorp traded 13.4 million shares, which is highly unusual. Highly unusual. Usually they'll trade about 8 or 9 million. Anyway, that's what's going on out there. And quite frankly, I'm not concerned about it. And I think you should be buyers. I wouldn't want to be holding dollars. I need to keep enough cash around to pay my bills, and that's it. Everything else goes into gold and silver related assets. Every week, every 2 weeks, every 3 weeks, every 4 weeks. And that's all I've got. And that's all I want.
Bob, you talked, this is in from Kyle, you talked, you mentioned it today also. A lot of these questions, you really touched on almost all the questions that come in. You talked about a possible future revenge. Could you speak on this? Was it revenge from the election by the Illuminists? Was the China credit scare, or was this a cover story?
I think it was a combination of things. And I think the Chinese withdrawing credit from the market was an exercise in desperation. The only thing, the Chinese stock market went crazy, and housing prices went crazy. I mean, they did all the wrong things at the wrong time, injecting somewhere between 1.8 and 2.2 trillion dollars into their economy over an 8-month period. I mean, you got to have your head screwed on backwards. Now, what is the outcome from that? The outcome is that they're going to have 25 to 30% inflation. Now unemployment is going to start climbing again. Their bubbles in those two markets are going to collapse. They have $2.4 trillion worth of foreign exchange, of which about $2 trillion is in dollars. And that means to me that they may very well have to sell dollar-denominated assets. What were some of the other things beside the Chinese?
Oh, I went on to, let me see if I can bring that up real quick. No, I had already, I had already closed his question. Might have to go back to it.
Well, there were a number of things he said there.
Let me see if I can find it real quick. Nothing about my computer is quick. How about this question? And I'll go, unless you want me to find it real quick. I guess you want me to find it real quick.
Yeah, go ahead.
Here we go. It was the Chinese question. It was the election on the Illuminists. No. Was it the revenge from the election of the Illuminists? Was it the China credit scare, or was this a cover story?
I think, what I've said today is very important in as much as nobody else is talking about it. Just like nobody else is talking about the split between the Illuminists. Goldman Sachs is on their way out, and J.P. Morgan is on their way in as the major domo. And that's borne out by the appointment by the President, Paul Volcker, to the newly formed Economic Recovery Advisory Board. And the smoke screen we've got here is that Volcker says that he is going to try to reverse the damage that has been put upon the system and bring leadership that doesn't include arrogance and try to cut off the avenues that are being used by people like Goldman Sachs to cheat the American public, like doing away with proprietary trading. And I'm going to tell you something. I was on Wall Street for 28 years. You stop at proprietary trading, you may as well shut down every one of the brokerage firms. It is not going to happen. And Paul Volcker knows that. Believe me, he knows it.